All right, traders, a very warm welcome to you all. Ladies and gentlemen, boys and girls, I'm Devang from the Financial Analyst, and I'll talk about trading psychology today. I think it was high time that I did an educational video, and that also with regards to trading psychology. You have to understand, technical analysis, fundamental analysis. They are great aspects of the markets, but it all boils down to psychology. I always think like this, when I come to the markets, that markets are nothing but a place where the buyers and sellers interact, and buyers and sellers are nothing but human beings. And when you put human beings under tested conditions again and again and again, they react the same way. So that is why we say that history repeats itself. Whatever happens today is nothing but a reflection of the past, because buyers and sellers, they do interact in similar ways under circumstances that repeat themselves. So that is why just wanted to discuss about that. Just a small brief. I wanted to give you why psychology is so important. And today I'll talk about three things essentially, which personally has helped me grow as a trader, grow as an individual. And whatever is your repertoire in the markets, whatever asset class you're trading, whatever is your experience in the markets, whether you're starting out your journey or whether you have 10, 20 years in your experience in these markets, I hope that, and I'm very optimistic that you will take out something positive from these 3 points that I will discuss. So without further ado, let's get started. And I want to thank you all for the massive support that you always give us, give the entire team. The love and support, the positivity that you spread on this channel is unprecedented. So I want to thank you so much. And I also want to thank you for the 18,000 subscribers on YouTube. It means a lot to us. And this entire journey, the progress we have had over this last 2-3 years would not have been possible without you guys. So I really thank you all. And we will be delivering, that's my word to you, we will be delivering to you to the best of our knowledge, to the best of our abilities in the foreseeable future. So let's get started. I want to talk about Wyckoff today to start with. This is the book that I've been reading recently. This is called Studies in Tape Reading by Richard Wyckoff. I've got 2 pages, the starting of this book, which I want to talk about. Very, very interesting. What is tape reading? Some people always ask me that. What is tape reading? Tape reading was an approach, I would put it that way, which was very prevalent in the 1860s to 1960s. It was invented by Edward Callahan, if I'm not wrong. And yes, I would say it has become redundant. Not redundant, actually. It had the use has become down. It is still used by those handpicked people who know what tape reading is, and it gives them a lot of competitive advantage over the others. But the use has come down. The knowledge has come down. The popularity, I would say that way, it has come down. With the use of the personal computers, electronic ECNs, in other words. But this was a very good approach in 1860s to 1960s. Jesse Livermore did it. Richard Wyckoff did it. A lot of very big names, big authorities on who have laid the foundation of the markets did it, because they personally believed. If you read a lot about tape reading, you'll understand that they all have written that whoever has tape reading, whoever knows tape reading doesn't go very wrong in the markets, because the tape never lies. This was basically used when the stock prices, the volumes were transmitted over telegraphic lines in those 100 years in 1900s. But wonderful approach. If you want to get into it deeper, I would recommend you read some books, some authorities on tape reading, which will surely help you out. But basically, this is one thing. The first thing I want to talk about is this question over here that Richard Wyckoff talked about in his 6th page on the book. He said, why are some people able to amass a fortune from the market while the others never acquired more than a few $1,000s, or others go into a loss? You already have thought about it. Why do some people make a fortune and others don't make anything, or they make a very small amount of the market, and both are at the same pursuit? And also their chances were equal at the start of the journey as far as the capital and the opportunity go. People start with the same amount, they have the same opportunities, the markets are the same, but still some people earn huge and some people don't earn anything, or they go into a loss. So the profits were there waiting to be won by either or the both. What is the reason that Wyckoff talked about? And he talked about some mental qualifications. That is something I want to lay your eyes on. And I want you all to read this paragraph, a very small paragraph on the page number 7, just following the earlier page. He said, by proper mental equipment, we do not mean the mere ability to make a loss and define the trend, or to execute some other move or characteristic of the professional trader. So, having a mental equipment doesn't mean that you're prepared to make a loss, or you can define the trend. That's not what he's talking about. He said having the proper mental equipment meant that it referred to the active or dormant qualities in this makeup. What are the qualities that a trader must have? So he mentioned that number one, the power to drill himself into the right mental attitude. You have to have the right mental attitude when you come to the markets, meaning you can't stutter. That's what he is trying to mean. When you come to the markets, you have to be disciplined. You have to know what you're doing, and you can't stutter even 1%, because if you stutter, you're into a loss. And he said this means that to stifle his emotions, such as fear, you have to deal with emotions like fear. If the markets are falling down and you're in a long position, or if the markets are going up and something unprecedented happens, you have to deal with fear and greed, something that even Christopher Wood talks about in his publication of Jeffries. Anxiety basically means when you enter into a position, you're anxious. Is it going to work my direction or not? Is the market going to move up or not? You're anxious. You have that butterflies in that stomach, your stomach. You're nervous. You have to deal with these emotions. Elation basically means the state of being very, very happy. When you're into a position and the markets move up, you're in a big profit. How do you handle that emotion? Elation. Recklessness, everyone's aware of that. You have to train your mind into obedience, so that you only recognize one master, that is the tape. We'll come to that later. And he said these qualities are very vital. They are like your sixth sense in trading. You have to handle all these emotions: recklessness, fear, greed, anxiety, elation. All of these emotions has to be dealt by you in similar manner. You can't overwhelm one by giving less weightage to the other. The most important part of this paragraph, he said some people, try to understand, it's very, very important. Some people are born musicians, while others seemingly void of musical taste. Some people are musicians, they have beautiful taste to them. They have the innate ability of innate likeliness towards music, and others are void of musical taste. They have no sense of music. And others develop themselves into until they become virtuosos. And there are some people who work hard till they become musicians. And this is the most important part. It is the I will in a man which makes him mediocre or preeminent. In the Wall Street parlance, a dub or a big trader. The most important thing I read in this book, I personally hope that you understand what he said. The most important thing is that I will in a man, which either makes him mediocre or a dub in Wall Street parlance, or you can say idiot, or a big trader. I'll give you an example of this. Last evening, I was conducting a webinar for our mentorship clients, and we were discussing the market outlook for the foreseeable future, for Monday, etc. And I gave them some circumstances, and I put the question on the floor for discussion. I said that, what do you guys think about the markets are going to be? And some people answered really well. I'll give them the I'll acknowledge their efforts where it is due. But there were some people who stuttered. What do I mean by stutter? I'll explain. Some people said, the markets are not looking very good. We are seeing heavy call writing, and some sort of weakness is there in the market. So we will see what happens in the market tomorrow. How this sounds to me, that I might do this, I might do that, I'm not sure. Remember one thing in life: you can't think in the market. It's a very, very important lesson I've learned. Whenever the markets are in longevity, when the markets are continuing in the live trading session, that is the time where you can't use your minds. Your mindset, your approach, your strategy has to already should be implemented the day before or 1-2 days before. For example, right now when I'm sitting in front of this computer, I already know what I'll be doing tomorrow, which I'll discuss at 6 p.m. tonight on Sunday. So I'm not going to think tomorrow morning what's going to happen in the markets, but I've already thought about it today. This is called basically doing homework and being ready, having that mindset ready. And yesterday when I was speaking to my clients, and some people said, we have a support here, resistance here. Let us see what happens at those point of time. And they didn't have that I will attitude. And I went very blunt, and I always like to go blunt, because I personally believe when you don't go blunt with someone, they don't remember, they don't learn. If you're very sugary with someone, if you sugarcoat all the things, people never learn. But you have to be blunt with people to learn. That's how markets, when they give you a loss, that means they're blunt with you. How I've discussed earlier, markets are like a natural disaster. I'm not going to compare it that way. But for example, they don't have emotions. For example, let's say you are in one of the countries which has a good ocean, and unfortunately, God forbid, there's a tsunami coming your way. And the tsunami is not going to care who you are. It's not going to care, are you a man or a woman? It's not going to care what's your qualification. If you are standing there and some other person is standing there, it's going to have no bias, and it's going to sweep you away with it, no matter who you are. Same thing with the markets. That's the way of markets feedback to you. Markets are very blunt, and that is why we learn. If markets were sugarcoating everything, we would never learn from the markets. Coming back to the topic, I told these people, I said, why are you stuttering? Why are you not sure about the markets? You have to come to the markets and say, I will do this. I said, for example, tomorrow, if the markets open gap down, it will break down. It is going to come down. I said, I'm already ready with that mindset. Why are people still, when I talk to people, they say, this might happen. For example, I remember this question I laid on people. I said, you have a 1 lakh trading account. Where do you think you will go in 1 year? What do you think is your outlook from that trading account that you have in 1 year? So this person said, I think I might reach a 5 lakh account. I said, what is might? Are you dreaming still? Fine. If you have a dream, great. You have a vision, great, but protect that dream. Don't let that, opinion of someone else become your reality. But you can't keep saying might. I might say, I might, 15 years down the line, have a house in America, but it's all dreaming. The question is, what will you have and what will you not have? Same thing of life is applicable to the markets. When you come to the markets, have that power, have that will. Are you understanding? When you come to the market, you have to say to yourself, today, I know that markets will do this. If it doesn't happen, you have a stop loss. You have a stop loss, but you come and you don't stutter. If you stutter, you're gone. Hope you get this idea of what I'm trying to say. And it's personally very, very something which I have always fell back upon. If any single day I realize, any single day when I come to the market and when I'm confused, I either don't trade on that day, or I either trade a very small account on that day. But if I'm confused, I don't have that I will. I know for a fact I'm going to lose money on that day. So my advice to you going forward will be, when you come to the markets, you must have that I will nature. If you don't have that I will thing in your mindset, in your mind, don't trade on that day, shift to something else. But don't lose money unnecessarily. Don't come to the markets just to earn money. I would give you a very simple advice: run after knowledge, but don't run after money right now. You will listen to my experience, in the later part of this video, how I talk about my early years in trading. But when I started my journey, I ran after knowledge. I love to read. If you run after money, you will wipe out your account. But if you run after knowledge, money will then run after you. Just keep that point in your mind. Hope this has helped you out. I will nature, if there's something that you think is very relevant, please let me know in the comments. Let's make it a good discussion session. Let me know what your comments are on this lecture I'm trying to give you. Right? The second point, which I feel is very, very important. Look at my screen. $1 billion plan looks very, very optimistic and hopeful, right? Everyone hopes to gather a big amount of wealth in his life on this earth. I want to lay down an idea. I want to give credit where it is due. This is the workings of, if you attend international conventions, you will always, hear good traders outside our, out in international conventions saying that, they aim for 100% plus returns when they're trading in a particular year. And these calculations have been done on 2nd of July, the date is given by one of our mentorship clients, Mr. Nida Khan. I want to give him the credit. But this is something that I hope will change your perspective. A lot of people, when they come in the market, I speak to a lot of people. A lot of you speak to me in the times when I'm free, when I'm open to discussions. And a lot of people come to me with the same thing. They say, I've done a loss, 4 lakh, 5 lakh, 6 lakh, 10 lakh, and I want to recover everything in this year. That's the biggest misconception, the biggest demon in our life. If we made a loss, I want to recover everything this year. But people never go for consistency, or they never first go on building confidence so that they can, build that account again. Everyone wants to make money quick. Please understand, markets are not a get rich quick scheme. If you have made a loss in your trading life, in your trading journey, or if you've suffered some losses in your life, first thing is you build your confidence back. And that confidence is not going to come if you again inject some big amount in the markets and lose them again. It's going to come if you trade a small account, have a good profit and loss account for a week, for a month, for 2 months, and then we can start building the journey again. In both these examples, the main thing is consistency. Before scaling the mountains, we scale the stones and the rocks. We start small, but we start. That is how life is. The most important consideration, the most important tenet is building that confidence, getting consistent. Patience, precision, conviction. This is what I'm here to talk about. $1 billion plan. Let's say you have a $1,000 account, right? And you have a vision, I want to earn $1 billion. And people make this mistake. Why some people eventually earn big and why some people don't earn big is because of this. People that have a $1,000 account, example, or a 1 lakh account, they say, I want to reach 50 lakh this year. But they don't say, I want to reach 2 lakh this year. And maybe in 20 years, I want to reach this amount. No one wants to go slow. I want to give you an example. I want to give you a very good example that my father taught me when I was 16 years old. When I was 16 years old, coming from a small town in Punjab, Amritsar, I was always very interested in driving cars. And we had this Toyota Corolla Altis about 9 years back. I'm 24 now, so 8 years back. We had this Toyota Corolla Altis, and whenever we used to go out for family dinners, I always would tell my dad, Dad, can I drive the car home? And I was 16. I had a learner license only, nothing else. And my dad always told me, he said, Devang, there's always an age. There's always an age of something. Please speak your age. I know you love to drive, but there's always an age, and your time will come. I never, listened to him. I said, "Theek hai, what he's saying is fine." You know how we are when we're young, how stubborn we are when we're young. And I always you should tell him, let me drive it, drive the car back home. Everything was fine. One fine day, I think it was Tuesday, we were driving from this continental restaurant, and when I was going back home, we had this the police, the Punjab police had was stopping cars over here and doing the normal checkup. And my dad again came to me and he said, I told you, Devang, there is an age for everything, and you are acting too fast and too mature for your age. That was the time when I understood that, Devang, always act your age. I want to give the same example over here. The police didn't stop me or anything. I was with my family, things were okay. I had the learner license, but I realized a big lesson. If I have a $1,000 account, I will reach a 1 million, 1 billion account in the future. There will be an age for that. But right now, if I'm sitting on this chair right now and I tell you from 1 lakh account, we'll go to a 50 lakh account today, that is being too optimistic. And that is going to be too overconfident of you. Try to understand, build it consistently. The $1 billion plan states the same thing. If you have a $1,000 account and every single year, if you aim to double your account, think about it. In the first year, 1,000 becomes 2,000. In the second year, 2,000 becomes 4,000. In the third year, 4 becomes 8, 8 becomes 16. If you keep on compounding, starting small and compounding, believing in the process, in 25 years, 1,000 becomes $1 billion. Imagine, you start small, you think it's never going to be possible, but if you compound your money starting small, you can reach a very, very big amount if you believe in the process. I hope you got these calculations, and trust me, it has changed the way I think. I used to become so greedy when I started my journey. Everyone does, we're starting options. We want to earn the 100% every single day. But now I always, if you hear my lectures on YouTube, if you hear myself on Telegram, you always hear me saying, guys, let's go for 5-10%. Very recently on Friday, I was using a 5 lakh account, 5 lakh amount, and I earned 50,000. Might not be a lot. People always think just 50,000 rupees or 5 lakh, but it's good for me. Why? Because I don't want to earn 100% in a day. I want to go slow, build myself up. I have a vision. I have a goal. I want to reach that goal, not today, but maybe 5 years down the line, maybe 10 years down the line. But I surely want to reach that goal. Try to get this mindset when you're trading. Let me give you an example, real life example. Let us say you're an entrepreneur. Let us say you have a business. Do you come and you start a business? Do you start a factory without a vision? Do you start a manufacturing unit without having the vision, what you want to achieve in the next 1 year, 5 years, 10 years? Because if you do that, if you're doing that, it's a big, big mistake. Maybe that's a very big lack of vision that's not going to help you achieve higher heights. However, if you come to the business, if you start a business with a specific goal, and you will see yourself working too hard to achieve that goal. Same is the thing in trading. Make trading a business. Don't make it a hobby, is all I'm trying to say. Fine, it's a good passion. But if you want to pursue trading or the financial markets for a long period of time, you make sure you treat it like a business. I'll give you an example. Let us say I have a 1 lakh account. You can do these calculations accordingly. You have a 1 lakh account right now sitting in your trading account, whatever it is, your brokerage. Go to yourself and say, where do I see myself in 1 year time? This amount that you see yourself has to be comfortable. Please don't say 1 lakh will become 10 lakh. It's going to be difficult, but it might be achievable for some people, but this amount should be comfortable. Something, it's a small goal, but you can achieve it. Let us say this amount is 2 lakh rupees. Or let us say, fine, let me give you an optimistic example. Let us say 5 lakh rupees. Okay, everyone's very greedy. I personally go for 100% gain per year, or could go more depending upon the circumstances. See, if you're doing options or derivatives, you can earn more. But if you're doing equity solely, the returns do come down, because equity is not something that moves like options. But assuming you have a mix of portfolio, 1 can become 5 for you. Great. This is the biggest mistake. By the way, I always ask this question to my mentorship clients and everyone, as I just repeated in the last segment. People say, I might come 10 lakh, I might come to 3 lakh. Again, might will not work. What will you do will work. Hope you get the idea. Don't dream, turn that dream into reality, and that will become a reality only and only if you have that will in your mindset. So let us say I want to earn from 1 lakh, I want to go to 5 lakh in 1 year. Let's assume a lot of trading holidays in a year, right? Let's assume you don't work for 2 straight months. You are outside, you're traveling, you have your own family to look after. You don't work for 2 months. You have 10 months to achieve 5 lakh in a year, which means that 1 to 5 means you're aiming for increasing your wealth by 4 lakh rupees in 10 months, which means that I'm connecting the dot backwards, like Steve Jobs has just said, which means 40,000 per month. So if you earn 40,000 per month for 10 months, you will make 1 lakh into 5 lakh. This means 1 month has 4 weeks. It means 10,000 per week is required by you if you want to reach that 5 lakh goal. It means 22,000 rupees per day, assuming there are 5 days a week working. So imagine, what have I done? When you start your journey, when you look forward, things don't match up. 1 should become 5. It looks so difficult. Everyone becomes greedy ki nahi, aaj hi kamana hai. And what happens? 1 ka jo 5 banana hota hai, it goes away to 0. Perfect. However, now think like this. If you earn 2,000 per day only, which is nothing but a 2% return per day, for 10 months, you will earn 4 lakh rupees, and your account from 1 lakh will go 4 times. Think about it. Think about what I have just said. Close your eyes and think about it. That is why, if you see, most of the traders who are successful in their journeys, they never go for one-off gains. They always go for small gains. Now, when you come to the markets, you must be happy when you get a 1, 2, 3, 4% profits, because that is compounding. Compound that consistently. $1 billion plan. Don't forget that. Hope you get the idea. You could go aim for 1 to 2 lakh also. By the way, think about it. 1 lakh to 2 lakh in a year. It looks so difficult, right? When you're sitting in the chair right now, but this means 1 lakh in 10 months, 10,000 in 1 month, which means 2,000 per week, just 400 rupees per day. If you want to double your account with 1 lakh to 2 lakh, just earn 400 rupees per day for 10 months and you double your account. That is the power of compounding. That is the power of consistency. Patience is a virtue. Patience, precision, conviction. These are the things you require in your trading. So right now, I've talked about the I will, which is nothing but conviction. When you come to the markets, don't stutter, even for a second. If you're wrong, take the loss, but have a stop loss. That's why we have a stop loss. This is about patience. Hope you are getting everything what I'm trying to say. If it's been useful so far, this survey I'm trying to give you, please let me know in the comments. Let me know what's your outlook. What are your comments? Just my 2 cents of some things that have really helped me grow in the markets. So hopefully, I believe this will help you out as well. The last thing is not a lesson, but something I personally do in my life. And I also want to answer now in the next 5 to 6 minutes on the most asked question to me: how do we pursue GAN? That's the most asked question on my social media. So I want to talk about all these things in the last point now. This point is about balance, the work-life balance, and how it can help you psychologically in the markets. Let me explain. Let me explain. The most famous sport in India. What do you think it is? The most famous, the most watched sport in India. It's different for the other countries, but in India, I think the most famous or the most respected sport is cricket. Whatever it is, it's cricket. Why do I say that? Is because I remember I was watching IPL a couple of months back on Hotstar, and at the point of time I was watching a Punjab versus Kolkata match, and at that point of time we had 50 lakh people watching on Hotstar. But at the same time, when I watched French Open tennis basically or Wimbledon, the same crowd on Hotstar came to 75, 50,000. So it literally from 50 lakh came to 50,000. That shows how many people, watch cricket in India. So I want to give an example on cricket. Have you ever observed that, when the cricketers, let's say you have a match at 9 o'clock, have you observed how the cricketers, they come to the field at 8:30 when they're practicing in the field, when they're warming up in the field, they never play cricket? How the cricketers, they start playing football, they start chilling out on the field. That's just 30 minutes before their match is scheduled. Could be a match as big as a World Cup final, but they still play something like volleyball or football in the field, because I've observed that. I've personally observed that. Why? Because yes, their work is stressful, and their work there for them is nothing but play. It is stressful. And obviously, if something like cricket for Virat Kohli or for any other cricketer in India is stressful, obviously trading where your money is involved is also going to be stressful. Have you ever thought about it? It's not that trading is so difficult. Everything in life that you pursue from your heart is going to be difficult. Anything in life. You will have that butterflies in your stomach no matter what you do. You will have that nervousness. If you're running a race, I was an athlete back in school, back in 2018, stopped pursuing it for now. I'm very sad about it. Hopefully I get back on my feet. But I remember I used to wake up at 4 o'clock in Mumbai, had a race in Kandivali. I live in South Mumbai. I had to go at 4 to Kandivali to, run these events. I was a long distance runner. And even though I practiced, 50, 100, 200 kilometers before that small event, I still had that, before that, gun was fired, before that the clap was made for the event to start, I always had that nervousness. I didn't have money on the line, but I still had that nervousness. So can you see, trading or markets where your money is involved, the hard earned money is involved, nervousness will remain. It's very, very obvious how to get away with that. It's going to be there, but how can we make things easy? Some things I've learned in my life, which I will explain. First of all, as I said earlier, don't run after money. I'll tell you what I did when I started my journey earlier. I always maintain a work-life balance. How? In April and May, if you have been tracking my journey, in April and May, I was quite aggressive on the options front. You can always go back on my YouTube and track my journey on Telegram. Whoever knows. I was quite aggressive on the options. I made some good money. I made some good losses. The process always goes. Number one. But when that breakout on the Indian market started in May, my options entirely ended. I switched to equity. For 1 month, I would say 20th of May. If you are on my Telegram channel recently, if you joined, you must have not heard any option trade. Very few. More often than not, you would see I was saying buy API sector, buy IT sector, buy this sector, buy that sector, exit this sector. I was fully focused on equity. And now you can see in the June end week how in the last couple of days I'm again back to options. Have you seen that transition in my trading? Why? Because I am maintaining a balance. It's not that I can't do options every single day. I just choose not to. Try to understand. I'm not saying I'm a great trader. I am trying to have a goal in my life. I'm trying to achieve that goal over the course of time. And I'm using this YouTube channel as a place where I can show my journey. I can show you the journey that I've embarked upon, and the comments, the feedback, what I see, the performance is all on YouTube. And what I'm saying is, can you see that the shift in my segments? Why? Because options or derivatives for me is a segment that is quite stressful. More quantities involved, more capital is involved. The profit loss is also, flickering a lot. At the same time, when I shift to equity, my life becomes easy. I'm so peaceful in my life. And when again, if I see some opportunity, I can shift to options. That is one thing. If you feel too stressful in life, if you feel too stressful when you're trading, when you punch in that order, if you get in that butterflies, maybe for some period of time, number one, you want to sit out. Maybe you want to sit out. Point number two, maybe you want to change a segment for some period of time so that you get your anxiety back. Remember the first thing that I told you about. The first thing, how to balance all the emotions, anxiety, recklessness. Hope you remember that point. So maybe if you're still feeling anxious, shift a segment for some period of time. Or maybe what else you can do is that you can take a break from the markets, or you can reduce quantity. I was speaking to one of our clients yesterday, heavy scalper, trading 25 to 3000 quantities every day on Bank Nifty for a time frame of 2 to 3 minutes. And he said, I was still feeling very nauseous when I trade. I would say giddy, or I would say anxious. And he said, what do I do? He said, I don't make a lot of losses. There are times when I make a 1 lakh loss. But he said, every single month, I'm still sitting in a good 3-4 lakh profit. So I'm doing fine. He said, but I'm still feeling so anxious. What do I do about it? I said, maybe it's a one-off gain. And maybe you want to reduce these quantities. I gave him a very simple suggestion. I said, maybe when the markets are in the range, or when you're not confirmed, as I said, when you don't have that I will do this attitude in the markets, reduce your quantity from 2500 to 1000 or to 500, so that that profit loss is not too much. And when you're sure about that market, again increase that quantity. But these changes that I'm suggesting are required. Either stop trading for some time, get that mindset back, get that feeling or get that comfort back. If you're not comfortable, reduce quantity for some period of time, or try to shift segments. Try to see that impact it will have on you. Understand. The last thing I want to talk about, second last thing I want to talk about, is about what I did in my previous journey. And hopefully you will see how I combine this with all the people who are trying to ask me, how do we pursue GAN? See, again, try to understand what happened. The earlier years, everyone starts by passive investing, passive trading. I'm still more focused on equity. I'm not very much into options. I do it for a couple of days, couple of period of time when I think the opportunities are good. But again, when things start to go in my direction, I always shift to equity. It's just how I am. Maybe equity is something that I've always fell back upon. I always tell people it's all about the personality. My family background is into accountancy, chartered accountancy, finance. So maybe because of that, I'm more into the fundamental side, which helps me more into investing and maybe not into trading. And maybe it's because of that I have that patience element involved when I trade as well. Forget about that. I started my journey when in investing, etc. But the major part of my journey, I have sat out of the markets. I remember these times, when the markets were in the longevity, when they were moving in the live markets, I used to sit out. Why? And observe the markets, because that gives me objectivity. If I am in a position right now and the markets are doing something, I cannot think objectively. But if I'm sitting out of the markets and then I think, I can see the markets objectively. And that is something which is required in the early years of your trading journey. Please understand, money will be made one day or the other. If you're not making money today, you might making 5 years down the line. But right now, if you want to pursue the markets aggressively, if you want to maybe leave your job, a lot of people ask me this question, can I leave my job? I will say not right now. To leave your job, to come to that decision, don't do it right now. It's my request, because you right now you have something to fall back upon. My advice will be, first sit out of the market for an extended period of time and watch, observe it objectively, how things are moving. Your focus right now should be how the price, how the volume interact with each other. That was all what tape reading is also about. When the stock prices were transmitted over telegraphic lines, people observed this. What was the price? What was the volume, etc. It's an approach that was working for the last 100-150 years. So your job is sit out of the market, observe how prices react, how stocks are moving. Every stocks move differently. Understand that, and then come to the market with your money. At the same time, for example, if you are studying an indicator, or if you have a particular strategy in mind, and if you use it for a very good period of time, take a break from that strategy, because you might get frustrated. Again, come back to that after a period of time. Have that balance. That balance is required for you to progress in this journey for an extended period of time. I hope that point is very, very clear. I also remember how I keep on changing my focus. I'll give you a very simple example. In April, March, in the last couple of months, June, you saw me how much aggressively I was studying into the works of GAN. I did produce a lot of material also, thanks to the various authorities on GAN, inspired by them. And before that, it was not that I every single day read GAN. Coming to the last question, please sit out of the markets, objectively observe. the last thing I want to talk about is how to pursue GAN or how to pursue any authority on the markets. I always tell people, please, there are so many authorities in the market who have laid the foundation of the market. Please read what they have written, because that will really change the perspective. Let me talk about that for a minute or so before we conclude the meeting. April, May, June, this was the month I aggressively studied GAN. But does it mean I studied GAN every single day, every single hour? No, I only studied on Saturdays and Sundays. That's all. That is all, as a passion. During the markets, Monday to Friday, I was focused on price, volume, how they move on my own trading. But Saturday, Sunday, I pursued my passion. I love to read. I read their books. I read his books. I can't expect myself to read on Saturday, Sunday and use the same on Monday. Trust me. Trust me. It's going to take some time. It's going to take some back testing. All I'm trying to say is I only studied as a passion. And when I studied as a passion for I would say 3 months, I had good, I would say 15, 20 or 50, 60 hours reading that. Imagine 4 hours on the weekends means 8 hours, 8 hours in a week, which means about 30 hours, around 90 hours in 3 months. So that eventually counts. I don't want you to devote all the time that you have right now in studying an authority on the markets. Your time right now should be spent focusing on how the markets are moving. First, become a good trader. Understand how things move. Understand the various products, equity, derivatives, options, future options, commodities, other asset classes, forex. Try to understand different products. Then come to the various different approaches. I remember back in December, I was not too much into GAN. I always did fall back upon him. But in November, December, my more focus on the weekend used to be Elliott. Before that, my focus in the April, May 2020 time used to be on Charles Dow theory. He hasn't ever written a book, but his tenets of Dow theory, his understanding has been given by a lot of people in 1930s. So you saw how I kept on changing my focus, because if I read GAN for 2 years, I'm gonna crack down. Trust me, I will crack down. So I kept on, not only in the markets, you can see how in life also I keep changing my focus. And when I'm done with right now I'm reading Wyckoff. Right now I'm reading Wyckoff because I got bored now of GAN. Doesn't mean I got bored for extended period of time. For the time being, I have stopped. I have whatever I have understood, I'm going to back test it. But now for the timing, I come to Wyckoff. I read his books, then again maybe I come to GAN. I hope you are understanding that. So just my 2 cents in the market. Hope you found it helpful. And that's all about it for now. I will see you around 6 o'clock tonight for the post-market outlook. Thank you so much.